Hi guys, this is Simon with Trade and Perform Coaching, and I want to cover an area that's very important to to my trading and in helping others become great traders. And that is, can you take a stop and still execute your trade plan through the course of the day? This is something that plagues a lot of traders because you either slip into a fight or flight or into a fear process where you're like, well, whoa, wait a minute, the first trade did not work, so I'm going to not take my next trade. I'm going to go and watch what happens. And inevitably, that ends up just killing a lot of traders with good trading plans, but fear keeps them from executing it properly. And I'm going to give an example of how I had two trades completely fail on me, and then the third trade ended up yielding a 35-point profit. And we called it out in real time. I actually posted, I believe, a real-time video of this very trade. But obviously, no one's going to watch a 4.5-hour video and see what went right and what went wrong. So I'm going to try and give a synopsis of that. First, I want to read from Mark Douglas's work. If you've been following me for any amount of time, you know I'm a huge fan. This is from The Disciplined Trader, and we're looking at page 71 on the chapter called Executing Your Trades. So he says specifically here, your ability to execute your trades is a function of the amount of fear you generate. Notice it goes, not that the market generates, that you generate, or the lack of it. Fear is always the result of your beliefs about the threatening nature of the environment. What that means is, if you believe that the market's going to take your money away, make you look stupid, make you broke, not enrich you, all of those things are fearful thought processes, and they're all things that can shift you into a fight or flight mode where you're no longer following your trade plan, and it can be devastating. He goes, so then he goes on and goes, what could be threatening about the market? That's a great question. Well, immediately when he says that in your head, well, in my head, this is what I think of. What could be threatening? Well, damn, the market could go up forever and run over my shorts. It could go into a free fall and take out all my money, right? It could get to my entry zone but not get to my target point, so I have to exit early. It could hit my stop. Some people view their stops getting hit as a threat, right? All of those can be so damaging. So let's keep on going on and see what he's saying. He goes, so he answers the question himself. What could be threatening about the market? Answer, nothing. If you had the confidence and completely trusted yourself to act appropriately under any given set of market conditions. What does that mean? He means follow your trade plan, just as it's written. Your trade plan should have a maximum stop loss for the day. I know mine does. It's essentially 8 ES points on a full-size trade, okay? And if that stop is not a threat, that max stop should let you come back and trade the next day, right? It just saves you from that particular day. Well, then getting that stop is no longer a threat. As a matter of fact, to me, it's a good thing. If I hit that max stop, it means that I'm wrong or my trade plan's wrong or it's just a fluke of a day. Either way, I know I walk out of here capable of coming back and executing my business plan the following day without fear. He goes on to say, emotionally, what you fear is not the markets, but rather your inability to do what you need to do when you need to do it and without hesitation. So we're just going to take that little paragraph and we're going to go through the trades on Thursday. And I'm going to show you how, had I not followed my trade plan in my execution process, both from entry, exit, and stop, that I would have gone from having a home run day to having an absolute miserable day. So let's start off at the beginning of the day. So I'm not going to go through and explain how my zones, how each of my zones work, or how the swing trades worked. I've done several videos on this, and if you look back in the history, either on my YouTube channel or in my blog, you'll see videos where I've explained the swing trades in detail. What we have here is early in the day, and to clear up this chart, let's go over to I have another chart that just posted swing trades on it. And let's come back here a little bit. Maybe it's not here, and I thought it was there. It is right there. Okay. So let's get background dragging going on this. Okay, here we are. So this is just the chart with only the swing trade indicator. And just to kind of go over quickly where the swing indicator triggers, we have the basic concept of, in this case, the market pushing up, swinging around, because this was a huge gap, so you can imagine that it pushed up overnight, swinging around, and then on this swing around, somewhere in here, usually a swing short triggers, and a swing short triggers right here, and then there's several entry points. Again, those are covered in my video. But what we're really looking for is an entry what's called an entry number 4, which means that after the swing short is triggered, we come up and then we trap back below the neckline, and that is an entry number 4. There's other trades in there. So originally I thought we were so extended early in the day that I could take an entry number 2 and get a rotation to the downside, and that's exactly what I did. This is entry 1, this is entry 2, is a 50-60 retrace. I took the trade at 1964, and my first scale was for 4 points, and you'll see that I just barely missed getting my scale. I actually had to adjust slightly and took a scale at 1960.50 right here, and was able, now remember my stop is all the way back here, it's 1 point behind the swing high, right? Nonetheless, my original entry was right here at 1963, 1964. My stop was 1 point behind. I was able to get 1 scale off, and my plan on this trade was to get 4 scales off on the first half, meaning I would get 4 to 5 points. So 5, 10, 15, 20 points was my target on the downside for the first half of the scale, and then leave a trailer. And remember, we've had such outrageous ranges in last week. This is actually doable. Well, I get 1 trade off, and by the way, this is an adaptation to show you how I change my trades. Normally, this 20-point scale on the first half of the trade, when the ranges were tighter, if you go back 3 weeks ago, the way this trade would have worked would have been scale the first half of the trade over the next 4 points. So if I shorted 1963, the scale would have been 1962, 1961, 1960, 1959, move stop to break even, and hope the trade kicked out to 7 to 10 points, right? But obviously we've had very extended ranges. So I had to make a decision early in the day. Do I stay with my extended ranges target, or do I bring that range in back to a 1, 2, 3, 4? Well, I had decided before the day started that 5-point scales, 4 to 5 point scales made sense. I was going to stick with it, but I paid that price. I ended up getting stopped on the majority of that trade right here at 1970. The savior on this trade was that I went to 1/5 my normal trade size, which means if I normally trade 10 contracts, I would have gone all the way down to 2 contracts. If I trade 20, it would have been 4, so on and so forth, right? And importantly, because of this stop, right, this stop was not appropriate for everybody. The stop was essentially 1964 to 1971, and some traders simply cannot afford a 7-point stop. That's fine. All you have to know before you take that trade is whether A, the number of points you can handle on a stop, and the number of contracts you can handle with that particular stop, right? So for me, this trade made sense. I got 1 scale off for 4 points, and I took a stop on the balance. But again, I was 1/5 my normal size, not a big deal. We then ended up pushing higher, and the next thing I'm looking for is an entry number 4, and I want to show you this here. Let's go back to the trade for a second, and I hope I'm not making this confusing. I'm trying to keep it as clean as possible. So we obviously pushed up, and I get stopped out here. The market then sets a high, right? We break out above this high on this 5-minute bar right here, this bar, and this bar back in with this arrow in this is my second trade of the day, right? I take the entry here at the close of this bar, which was roughly 1973.50, and we push all the way down to 1968. I'm obviously able to get off a 5-point scale on this trade, but as you can see, once again, I got 1 5-point trade off. Again, I get stopped once again. On this trade, I increased my trade size to 1/3 because this is one of my highest odds trades, right? So I'm a little discouraged at this point. I have a stop here, I have a stop here, and I have another trade, if you look, coming up. And what I had said in my trade plan at the beginning of the day was that if we extended up to 1980, that 1980 was my highest odds trade location, and that I would take my trade there. I would take the trade at half size, and in this particular case, it required a 10-point stop, I entered the trade at 1979.75, and I needed one more thing to occur. Even from this level, right, I needed the market to trade in and close. The trap point had now built up to this point right here. I needed it to close back in order to get to trade. So this was an aggressive entry, and it was based on the rotation size on the day and on the volume profile. This 1979 to 1985 was a very key location, and I thought a 10-point trade would keep me in. But importantly, from this point, I have a couple of things going here, and I want to bring the synopsis back in, right? Because again, this shows a couple things. Number one, I cut my trade size down on both of these trades to handle the difficulty in both the range and the fact that the market was rotating up very hard and we've had extreme volatility. The closer I get to a exhaustion point, the more I'm putting on in trade size. But I also am at another dilemma here, and I want to tell you about that. My first two trades have failed in here, right? I'm at my high odds location, and at this point I can go, geez, if I get one more stop, I'll hit my max 8 ES points, right? This is a half size trade. If this gives me my full 10-point stop, that would be a normal 5-point stop on a full size trade, and it'll put me at my limit for the day. I'll be done, right? So you got to remember, I have several factors working against me while I'm trading. I have all the people in the room watching me trade live and in real time, right? They're trying to learn from my example. I have a lot of, and that brings up some natural pressures. No one wants to look stupid. No one wants to be uncomfortable, right? Everyone wants to look like a hero. B, I'm having a great week. In my mind, one of the committee members comes up and says, hey, Simon, no. Don't take that trade. You're only down a little bit on the day. If you don't take this trade, brother, you still walk out looking like a hero for the week, right? And then the last committee member shows up and goes, yeah, you'll look really stupid if you lose money here, Simon. Stop while you're ahead. There's only one problem with that. If I get scared on this trade, I get scared on every trade. I either honor my stops, and my max stop is actually a legitimate max stop, meaning I've looked at my business plan and I can survive an 8-point stop on the day, or I need to adjust my trading plan. But either way, this becomes an emotional decision, and I don't want to make emotional decisions. So what do? I grab my trade plan, which I always keep right here next to my desk, and I read it, and I go, I'm not down 8 points on the day. I take my next setup with the appropriate size. I let it execute, and once I take the trade, I follow the trade. There's nothing more to be decided, right? It's either going to stop and I'm going to go home for the day and be fine, or I'm going to get money. So here I am. I take the trade at 1980. I put a 10-point stop in, right? And sure enough, it comes up and starts squeezing me. Now, one of the things I want to do, and I'm going to pause for a second. So what I wanted to show everyone here was that when I put on the trade, I'm already thinking, if I'm just relying on my emotions, I'm already in a fearful position, okay? And you can see I tweeted, this is obviously dated August 27th. I need to, there we go. Well, I wonder, I'm surprised it actually does have a time step, 9:10 a.m. on August 27th. That has to be a West Coast 9:10 a.m. Let's see if that lines up appropriately, because the first time in, there you go, 11:10. So that makes sense. It's California servers. It's 9:10 a.m. So perfect. Now I understand what's going on there. Let's pull that back up. That's really convenient. I didn't know that it timestamped it like that. So you can see as we move in, I said right here that I was stopped on 3/4 of the prior trade, right? And now I'm short half size at 1979.75, right? Again, you can see that what time I posted that at. There's the time at 9:09 a.m. 10-point stop. I put it in highlights, right? Why the 10-point stop? The volatility is so high that I feel my trade won't survive unless I have, according to my calculations, that I have a 10-point stop. Look at the fear that's already in my thinking, right? If I'm stopped here, I'll be done for the day. Scales every 5 points on the first half of the trade, so I will scale that over the next 15 points, right? And I put, so scales 1974.75, 1969.75, 1964.75, and then stop will be moved to break even or net break even, depending on the guys in my room, what their risk tolerance is after the second scale, right? And there we go. That was an options trade. And then I put, so if you'll look, right, and let's get a time on this. So what time did this occur at? At 10:16 a.m. So that's 12:16 our time, right? Central time. And I write, I'm already writing in here, same time I believe here. Let's take a look. Yeah, 10:17. I said obviously this is the no fun part of this trade. The signal fails on straight up and straight down markets. Stop in place, but right, and I'm trying to negotiate with who am I negotiating with? Not the market. The market doesn't give a damn what I've done, right? I'm negotiating my own emotions. I'm trying to get through my trading. What's keeping me in line? My trading plan, guys. That is what I'm looking at, my trading plan. If I rely on my emotions at this point, I'm covering the trade. What I'm feeling inside is, hey, let me get the hell out of this thing. I'm done, right? I'm done. I've had 2 of my trades got stopped before here. I don't want the embarrassment of a 3rd trade. Why let it go 10 points against me? I can just end the pain here, right? And you're right. I said, and then I go on a pit. I said, we've killed them for 3 weeks. Only right that they hit back every now and then. If I'm stopped, I'm done for the day. So you can tell I'm in fear here, guys. I'm actually in fear. I'm just following my trade plan, right? And I actually leave, right? I put my stop in place and I leave. And I put still out of office and watching. Like everyone, I hate getting stopped. But discomfort part of the deal on the road to getting paid. Now, what time do I put that in at? That is at 10:51. That's 12:51 our time. And then I go on and even put one more time in there at 10:51. I'm staying to the plan. I can't explain how important this is to my trading, guys, how important it is to anyone's trading, that whatever your edge, you stay to your trade plan. If you can't do it, don't trade it. It's not right. Something's wrong with the trade plan if you can't keep it, right? If you cannot keep it. So let's go on and see what happens. This is 12:51 right here, and I'm wavering at this point, right? This is right in here, and I'm like, man, I'm just going to get run over at 12:51, right? What's the next thing that happens? Take a look at this. I come in, and I'm ready to give up here, right? I'm sure. I feel defeat. It's paid back. It's going to come back and make a new high. And then all of a sudden, look at the tweets. Comes in perfectly, right? A little while longer. So that is 1:21 afternoon, 1974.75 plus 5 done on the first scale. Right behind that, right? So you can see how that's coming through as we're moving down. 1969.75 done on the next scale, plus 10. Right? Stop to break even or net break even, depending on your trade. And I get a little cocky here, doing a little Donald Trump-esque type tweet. You'll see right down here is we're staying with the trade. We're taking our scales, right? And so this is almost 2 p.m. in the afternoon Central Time, 1964.75, done for plus 15. 59.75 is next. Moving scale up from 61 to 61 from 1959.75. And then finally, you'll see that a little while longer, 1961 done plus 18.25. And then finally, scaling 1955. And I wrote in here that that's plus 24 points at this point, that I only have a few cards left and I'm done for the day. Took a lot of energy to stay in, which it did. And then as you'll see, I put closing the position now. That's finally, what time does that take place at? That takes place at 2:05 p.m., right in the throes of this market throwing down. And I write at that point that I'm closing the, I had calls out, I'm closing the 1958 calls, and I put, I'm flat for the day, pretty much a home run. I closed the last of it at 1945.25 plus 35 points. None of this was possible, right? None of these scales were possible on this trade if I gave into my weakness over here. So this trade review is a little bit longer than I've been doing lately. I think it's very, very important. Oddly enough, or conveniently enough, we get a swing long print over here. I was too tired to take the swing long, even in options, and let the rest of the day go. So my name is Simon. I'm the coach at Trade and Perform Coaching, and my message is have a written trade plan. Learn to follow the written trade plan and verify that you have a proven edge. That's all we talk about. That's all we do here in the room, and provides us with massive trading opportunities on a weekly basis. Our stops are relatively tiny relative to our RR, and our discipline is very solid. And that's what I teach both in the one-on-one coaching and in the room. And again, my passion here is to teach others to get profitable, stay profitable, and avoid the boom-bust cycles that almost every other trader on the retail side goes through, and they're devastating. So please join us if you like. Email me if you'd like a 5-day trial to the room, tradeandperform@gmail.com. Join us, see what's going on. It's like I always say, take what you like and leave the rest. But I believe that you can day trade profitably, consistently, and with discipline. And my work here is to teach people how to do that. So anyways, have a wonderful day, guys. I look forward to having a great week this week. I'm rested. I took Friday off, and looking forward to kicking ass. Talk to y'all soon.